Some interesting stock picks to show you this week. And for that, we're going to start with Shiraz. Shiraz, you're in the insurance arena.
That's right. Allstate, the second largest in the personal lines, the largest publicly traded. And the reason I like Allstate in specific, but the insurance area in general is that they have good pricing power. They have been able to offset the catastrophic losses that these guys encounter every now and then because of issues beyond their control. Premiums go up. Specifically with respect to Allstate, they struggled for a good number of years, but turned around 2012. And that turnaround seems to be carrying into 2013. They had issues both on the homeowner insurance side and also on the autos. Autos is still a little bit problematic, but the hope is that from Q1 onwards, they should get back to the market share that they had on the auto insurance side. So overall, very profitable. Flush with cash, literally. And we talked about the share buybacks in the other segment. They are the poster child for buying backs. They announced they had a $1 billion buyback authorization already. They doubled that to $2 billion. And it's not in small increments, as you mentioned. They're going to complete it by March 2014. This is a $20+ billion market cap company. They'll be buying about $2 billion worth of their own shares. They bumped their dividend as well, 12-13% in the last time. So overall, in very good shape. The stock has been doing extremely good, but my sense is that it has more room to go.
All right, Eric, consumer discretionary is your area this week.
That's right. Usually I focus on international picks for these segments, but taking a look closer to home, thanks to all the issues we're seeing in Europe and Korea. And I think this is going to be a good pick because consumer and retail are two of the only segments that are projected to have positive earnings growth in this Q1 earnings season. And this ETF is what I like to say is smart passive indexing. It takes out the bottom 25% ranked stocks based on a number of growth and value metrics. And so you're left with just 125 consumer discretionary companies, and they all have about a little less than 1% each. So you get a wide range of exposure, a lot of media, specialty retail, internet companies. So it's a nice basket play on the whole industry, and I think it could be a solid performer here in Q1 earnings season.
All right, Kevin, you're looking at an oil equipment maker.
Right. I am going to break with tradition, and my pick is actually a bearish pick. So for NOV, my ticker is NOV. That's a National Oil Well. That's my company. So I am looking for NOV's stock price to go down, and that is how we plan on making money with this pick. But very simply, NOV, they design, manufacture, and sell machinery and equipment for the oil and gas industry. So what I'm looking at with these guys is they're currently ranked a 3, but they have been flitting between a 3 and a 4 for quite some time. And if you take a look at their industry, there's really no great shakes with their industry either. Their industry is ranked 171 out of 265, so that puts them in the bottom 35% of Zacks ranked industries. And the reason why this is important, though, too, is because companies and industries in the bottom 50% have significantly underperformed industries in the top 50%. So just being in the bottom 50% kind of acts as a weight on that stock. Now, when you take a look at NOV's numbers in particular, they're still projecting a growth rate, but their growth rate of 3.6% is a fraction of the industry's median, which is 23%. And then if you just take a look at the earnings estimate revisions that you can see pretty much across the board, it doesn't look as if things are going to be getting better for them anytime soon. So if you look at a chart too, you can see really over the years, while a lot of the companies in the industry have been doing fantastic, they have been trying to break out to the upside, but they have failed each and every time. So I think now the path of least resistance is going to be down. Over the short term, I think NOV is probably going to go down to right around the 57 or 55 area. That would represent a potential price move of 15%, which would be a profit if in fact you're short. And over the long term, I'm looking for a price target of 45. That would represent a price gain of roughly 31%. Now, there's really two ways you can do this. You can either short the stock, or you can buy a put option on NOV. And I think that's probably one of the best ways to go, because when you buy a put option, you have a guaranteed limited risk. What I like right now is you can take a look at the August $70 puts. Those right now you can pick up for under $1,000. They have a 71% delta, and I think it is a fantastic play, and it's a smart way to be able to use your money. The great efficiencies by doing options. So whether you decide to do the stock or the option, I think that there's a lot of downside potential, i.e. profit potential. I think that there's a really solid profit in the very near future.
So do you have a position on in that
I
stock?
do have a position. I am long puts in NOV right now.
Okay, anybody else own their stock?
No, I don't.
All right, thank you all for that. Don't forget, you can see other articles that these folks write, and we have other stock picks and stock picking strategies all on Zacks.com if you're not there already watching this video. Check it out. They change often, so check back often. With everyone here, I'm Terry Ruffalo.